Hello and welcome to our How to Trade series. This is video number 6 and you'll find lots of good information in the other videos as well, 1 to 5. I suggest you watch them all. Now I'm only going to make 10 of these videos because an awful lot you can actually research on your own. So let's get straight into what we're going to cover today. So the first thing we're going to cover is order blocks. And in this chart, which I've got in front of me, I can actually see that the order blocks are exceptionally clear in this market, and I'm going to show you how you could have got this low and this low with absolute laser-like precision. In fact, you could have also sold that top just there. Let's get into it. How do we find an order block? Well, order blocks are quite easy to find. You can see that after this large move down, we got 3 very bearish looking, very negative looking candles, and then the market bounced up. So the question is, if this was such a negative candle, then why did this market bounce up like that? And the answer is really quite simple. Market makers, banks and big institutions with the money to actually move markets were actually pushing price down, and they were pushing price down so that they could buy it. And that is an incredible order block. So once we see that at the end of a move, we can actually see the order block quite nicely. And you can see all they did was they pushed it down to that level to take out the liquidity that was sitting at that low there. That's all they did. So you know, because that swept liquidity there, it took the orders there and it bounced up. You know that this is a really good order block. Let's mark it up and just see how accurate it is. My personal preference is to mark the top of the down candle, the body of the down candle like this, and then I mark the low of the wick. So that would have been the top of the body, and this would have been the low of the wick down here. Now what I do usually is put a little block around there, and it'll look something like this. And if I can draw it correctly, I can see that that's perfect. And you can see that this market just pulled into this level, and it was so accurate. You would, if you got into that trade, you had no market movement against you. So what's the rules for finding something like this? Well, what you want is you want to see the confirmation that liquidity was taken. So if you have a previous level where there was a spike or an area where it looked like there would have been stops, that gets taken, the market then reverses. That's possibly one of the best order blocks to look for. And as we go up, I'll show you the other order blocks as well. So as this market moves up, you get down candles. The black candles are the down candles, and they form against the direction, which is upwards, and they usually form just before the turn. So this is a black candle and it's to the downside, and we're just going to apply exactly the same strategy. We're going to put a box on the top of the body and the bottom of the wick, and it's going to look something like that. And you can see that this market, if I just look there, when it pushed out of this area, it came back down and it tested this area perfectly. Now, it wasn't as accurate as that one, but it was still really good. And that is the power of using order blocks in your trading. Now, let me ask you a question. Can you see the order blocks in this market? Let's see if you can. We're going to mark them up. So the great thing about this is marking order blocks is quite good fun. And you can see that this market, this indeed was an order block, because when the market came back down and it tested it, it actually reacted up. But the higher up the move you go, the less important the order blocks are. So the first order block, this one here, is really the one you want to be trading off. These ones are very good levels to actually help you advance your stop. So let's say that you got in at this point here, you were very good and you did some excellent trading. I'd be proud of you. Then you would have got in there, you would have also bought in there, and you could have advanced your stop up. Now at this point here, you could have actually advanced your stop to this level. And for whatever reason, you might have seen that this was a double top, which I know it was, so I don't even have to really bother myself too much about it. You would have been taking your profit up there, quite simply because that would have been an excellent intraday target for a day trader, just targeting the top of the last swing or targeting the low of the last swing if you were selling. That's order blocks covered. Now let's get into something that's slightly more exotic and is quite easy to see. It's called a liquidity void. Let's describe what a liquidity void looks like. And I can see this by eye because I've been staring at charts for longer than I care to imagine. But that is the formation of a liquidity void. You get a powerful move, and I'm going to mark that. So you get a little candle beforehand, then you get a powerful move to the downside, and it creates a liquidity void just there. Now, where does that liquidity void end? Well, when the market comes back up and it retests into that area, that's exactly where your liquidity void forms. So that's your liquidity void, and it's an area that I'll be watching very, very carefully today, because if this market just comes up and comes into that liquidity void and then shows weakness, I know I have a very, very good trade. So let's have a quick look at this chart and see, can you spot the other liquidity voids? So remember what we need for a liquidity void. We need a push, and then we need a gap between the top of that candle, the push bar, and the bottom of the next candle. So this here is a liquidity void, and you can see that price hit that level and then bounced off it. And here we have another liquidity void. As you can see, above this wick here, price pushed up hard and a liquidity void developed underneath it. So what good are liquidity voids? Well, liquidity voids, when they occur, are very useful because it tells you what's happening in the market. When liquidity voids are broken and they're traded through, it tells you that there is no longer enough demand to keep that market rising. Unlike down here, where we had a order block, and this wasn't quite well, it was actually a liquidity void. You would have had a liquidity void from here absolutely to here originally. So as this market came back down, it went into the liquidity void, and you can see that the market started spiking into that liquidity void, and it went down for, what did it go down for? It went down for the top of the order block. So when you get a liquidity void in conjunction with an order block, those are usually pretty powerful. So we're going to look at this top here and see, do we have a liquidity void and order block? So here we are at maybe a potential top in the S&P. What do we have? Well, we can see we've got this very, very big, powerful up candle here, and that must be an order block, because after this push to the upside, market makers must have been selling, because what did they do on the next candle? They just turned it down. So this is definitely a big order block. So we could mark that. Also, we've got, as this market came down, we've got a liquidity void. You can see here, price sliced through this area. So bottom of that wick to the top of the next wick. And that gave us a very, very good liquidity void. And the market pulled up and filled that to perfection and then fell away. So what have we got happening here? Well, if I extend this across to this area, you can see that we've got the last up candle before the market makers pushed it down hard. So market makers must have been selling in this candle, otherwise this candle wouldn't have done this. So this is a very big push to the downside. We've also got this liquidity void which is sitting above us, and we've also got the order block. So this area, and I'm going to mark this on the chart, is going to be very tough for the market to actually get through. Now, usually the US traders like to be at the very top of the market, so this could be a level that they try to achieve. However, if I get signs of weakness at this level, then it tells me that they're not going to try and make a fresh high, and that I can be quite confident in taking my trade from this liquidity void and this order block. Now, we've got an indicator which actually shows you the liquidity voids, and what this does is it draws them automatically for you. So I should be able to put the liquidity voids on here, and it should actually show me those liquidity voids. Yeah, and there we go. So we had a liquidity void, and you can see my marking of this as a liquidity void was good. And of course we got another liquidity void here as well. So remember what I said, liquidity voids and order blocks have more power when they are closer to the origin. So this one, even though it was very nicely tested, I wouldn't trade off. I'd be interested in these ones up here. Please like and subscribe this video. It gives me great satisfaction to see that people are subscribing to the channel and we're growing, and we can help traders just like you become better traders and become successful in their trading journey. If you want to, you can also join our Discord group. The link is in the description below. Thanks very much for watching, and I'll see you soon.